Next up, we have a presentation from Australian Vanadium with the ticker code AVL. AVL is an emerging vanadium producer developing its high-grade Australian vanadium project in Western Australia. To tell us more, I will hand you over to Managing Director, Vincent Olga. Good afternoon, Vincent.
Hi, it's great to be here.
Wonderful. Let me bring up your presentation.
Right, fantastic. The first thing that'll strike you about this presentation is that we've used the word greenfield, and that's really an important part of our ongoing strategy here. We're in a unique position at Australian Vanadium with the development of our split process and plant and mine to take advantage of the growing hydrogen sector that'll be developed in the Midwest of Western Australia. And that's really an important part of our decarbonisation strategy internally, but also in building, the second part of that is about building a vanadium industry in Western Australia that is able to not only deal with our deposit, but also deal with deposits, other deposits from inside Western Australia and other deposits going forward from outside. So creating a long life project. So quickly take you through this, give you an idea of who we are and what we do. Thank you. Just the company's been around for a while. We've got a lot of shares on issue, but we've continually worked our way up that trajectory in terms of risk reduction for the project. When the project was first, when I joined the company nearly 7 years ago, it was a resource project. Very little work had been done on the definitive studies work. So we spent a lot of that time building up the resource base, identifying very clearly how this would work as a resource project, as a development project, and we've made significant progress over time through doing that. We've maintained a stable register. We have put on a lot of shareholders. So we have quite a few shareholders around, but they've been, for the most part, you can see from that split at the bottom, there's a fairly good split, and a lot of the shares are held in that top 200. So we're pushing forward. The market cap's been moving up, and we're getting ready to assault the last hurdle of our project life, which is to get this thing into production, which every company really wants to reach that point. I'll come back to this team, but just so you can put some faces to some names, we have some very experienced people on this team, excluding myself. Cliff Lawrenson has a very, very good technical and corporate record here in Western Australia and around the country. He's on a number of boards at the moment, not the least of which is Paladin, which has done fantastically well, Caspian, which is a great listing, and both Pacific Energy and On-Site Rental. And he's got a very good corporate head on him, a fantastic person to work with, very corporately responsible. So I'm really enjoying working with him. The company's made big strides since he's joined us last year. Daniel Harris in our team and Todd Richardson, our vanadium expert team, with extensive experience in vanadium. It puts us in a unique space globally in terms of the strength of our vanadium team. And we look forward to moving that forward. So I won't come back to the team, but now just to know that there are people out there that are really, really focused on getting this thing done and have experience in getting it done. A very important factor. So just quickly, one slide on the vanadium markets. What is vanadium? It's used primarily in the steel market. It's used to strengthen steel. Its primary market is the Chinese rebar market, but it is used, that 60% of the world market is in China, 40% is in the rest of the world, but it is primarily a steel additive. It's used in aerospace applications. It's used in high strength alloys in both aerospace and defense applications. So it's qualified as a real critical mineral. But of late, the most exciting part of the market is the very small end of the market for vanadium is its use in energy storage. And AVL is a leader in this area, not only in terms of understanding of the commodity, but also in terms of working the application of this material through our own efforts in VSUN Energy, which is a subsidiary of ours, which we're using to grow this vanadium market. The vanadium energy storage market has potential to really take hold of the long duration grid level energy storage market in a big way. And there's just simply not enough high purity vanadium out there to support it right now. It's a market growth area that we think is going to be growing at 20 to 25% over the next 10 to 20 years. And we definitely want to be pushing some of our production into that space. But the steel market is there to support it. And there's there's a very interesting story around using vanadium in steel, which I'll come to in a minute from an ESG point of view. So just looking at the project in overview, it's located in just south of Meekatharra in Western Australia. We're on a transportation corridor out to the Port of Geraldton in the Midwest. This is very much a growth area and a big focus area for government as well here in the West. That mining corridor, the way we've set up our project is intentionally unique and strategic. We will mine our ore in Meekatharra and we'll transport a concentrate to a processing plant close to the coast. This gives us a number of strategic advantages over any other player globally in the vanadium space, because we give ourselves not only options with respect to energy usage, such as gas, but also with respect to byproduct sales. The project is fairly large, 200 million tons. Our reserve is smaller, around 32 million tons, but that gives us at a 1.6 million ton mining rate, a 25-year life in the current reserves, with significant opportunity to increase those reserves over time and extend that mine life. So this is a long project that'll be there for a long time, like many of the vanadium projects around the world, of which there are only 3, I might point out, but those are all long life assets that'll be there for a while. At 24 million pounds, we'll produce around 5% of the world's production, which again is the right size. Too much will blow the market, as we see from other commodities. You just got to come in at the right size. Financials for the updated pre-feasibility study, which we completed at the end of last year, were very attractive. The cash flows from the project were very attractive at the time, and we do believe that in the last year, as we've been completing our definitive feasibility study, we really can nail down not only the operating cost but the capital cost as well, and maximize that. The vanadium price has been in our favor. At the beginning of the year, of this calendar year, it was $5 a pound. It's now nearly $9 a pound. That's a significant move. Just for comparison, you think of the copper price per pound, around $4 or $5. You get a good idea that vanadium is worth quite a lot of money in terms of its final product. The focus for the company has always been to reach that bottom cost quartile. If you cannot produce vanadium at under $4 or around $4, you really are going to struggle in the hard times. You'll make good money in the good times, absolutely, but you want to be able to keep your doors open continuously. So again, the innovations and strategic decisions made by AVL in its location of these plants, with the ability to sell its byproduct, gives us some strategic advantages, which we know will keep our doors open for all the time. CapEx, while relatively high on most people's radars, is what can be expected of a project of this type, but there's a lot of opportunity to reduce that, given that the contingency at plus or minus 25% is nearly $100 million. So just really the high level points, because I know we've only got a little bit of time here. We've got the right deposit. It's a high quality deposit. It's high grade. It is robust in terms of size. It's confirmed reserves of 25 years. We've already got downstream processing capability confirmed through a number of grants, where we'll be making electrolyte for vanadium batteries and producing one of the highest purity products for sale into the steel markets. We're currently completing the DFS, and we're doing that so that it can be ready for bank financing. We're not messing around with that. It's an arduous process for anyone who's undertaken it, but it has to be done properly, and we're working as hard as we can. It's one of our major priorities to complete that as soon as possible. We have major status from LEED from the federal and the state governments, and it's ideal timing to be doing this because there's a lot of interest around critical minerals, and vanadium not only as a critical mineral for steel and defense, but also as a critical mineral for batteries. The team I've mentioned, top team, best team in the world as far as I'm concerned, for the vanadium experience, best place to be in terms of getting things done. We look at things in the cold light of day. We don't mess around with what is known. We have experience in the team that has seen things happen, and we make sure we move around those and act against them in the design. And another important thing is really taking an action-based approach towards net zero. There's a lot of talk around people moving towards net zero. We know that it's all about everyone collectively moving in this direction, reducing their own scope 1 and scope 2 emissions on the way, and then making sure that the products they produce can also contribute out in the marketplace to the reduction of emissions out there in the world. So on an action base, we can take steps with using green hydrogen. We have a collaboration with a company called ATCO that'll provide us with hydrogen on this plant to reduce our own emissions. And then vanadium, as I mentioned, when used in reinforcement steel, has a major positive impact on carbon reduction globally. So it is a bit of a green steel metal. That information is on our websites and on our social media feeds as to how much that impact is there. And we'll be talking more about that as we get through this. But again, the battery market, by storing and saving renewable energy in a vanadium redox flow battery, you significantly offset a lot of coal-fired energy if you can use it on your own stuff. So this is really an important growth area for us. So just skipping forward, I might skip a few of these really quickly. So just quickly, the project, just again, I've mentioned that the split plant is a strategic decision. It's about making the most of that red line, making the most of that port, and making most of the people who live in the Geraldton area to build a long life project in that area. This is the only way it can be done. And this is the way that AVL has seen the most beneficial long-term opportunity. It's not unusual in the world for people to separate their mine and their processing because of the benefits that lie at a port or near a coastline. So this is not rocket science, it's just practical. And we open up opportunities that we would otherwise really constrain us by being on site. Environmentally, really important as well. The mine is located in a very arid area, and it's also a very remote area. So we're far from gas and far from water. We need to make the most of mitigating all those impacts. I'll just spend 1 second on this. Is just a quick look over a magnetic image. The ore body is a titanium magnetite, so it's a magnetic signal. And you can see just by quick look that we've got a lot of blocks there within that red line. That dark red line is our granted mining lease. That's the subject of the definitive study. That's the thing that we'll be mining for the first 25 years. The lighter red line is where we'll be mining after that. So we've got plenty of upside here, and the ore body is consistent, it's well behaved, and we understand it very, very well. 2 second look at the layouts based on that. Multiple open pits with centralized processing of the concentrate, trucking of the concentrate out towards Geraldton. Another quick snapshot. Again, these will be available for people watching the recording, and you can see the open pit on the left. A very detailed and updated crushing, milling, and beneficiation plant from our nearly completed DFS work at the top, and then the processing plant at the bottom down near Malawa. So I mentioned the strategic nature of this. Why is it strategic for us for the coastal processing? We're near a gas pipeline. We don't have to build one. That's a big effort and a big cost and a lot of risk associated. We then open ourselves up to lower domestic gas prices so that the processing plant, which is a big gas user, can benefit from that. It's a good percentage of our operating cost, and we need to keep that cost down. We also need to keep the capital cost down of not building a pipeline. We have an opportunity to take part in new regional hydrogen consumption that'll be generated in the area. There's lots of hydrogen plants in the area. The AVL process can use hydrogen not only for power generation, but also in the kiln to reduce its overall carbon footprint. And that is a really big opportunity. So our relationship with ATCO will turn itself into an actual use plan, an actual activity that we're going to use hydrogen for. One of the first real offtakes that'll actually happen in Western Australia for domestically used hydrogen. So putting us in a very good spot. We can sell our iron titanium co-product. When we produce the vanadium from this plant, we basically squeeze it out of the iron titanium concentrate. And what we're left with is a perfectly reasonable iron titanium co-product. If you only make that in the hinterland, you can't sell that material because it's not that valuable. It's valuable enough when you're only 50 kilometers from the coast. So we can make a big margin on that material by being close to the coast. It lets us stay in that lowest cost quartile opportunity. Existing gas rail, stable, local, non-FIFO workforce for the processing plant, and a long life. Strong government support. So we're really looking forward to taking hold of the strategic location and turning it into what is going to be the beginning of this greenfield Australian vanadium industry. So just the last thing really, where are we now? What is that? What are our main priorities? we've done a lot of work. We finished an updated PFS at the end of last year. We really are producing a BFS that's going to be bank deliverable. So it's not easy in this environment to get it done exactly when people want it done. But what we're doing is building the best ship we can, because the next 6 months are already critical for us. We need to confirm due diligence, get the banking done, get the resources updated, get the new reserves in place, lock in our offtake agreements for iron, titanium, and vanadium, and then continue. We've already engaged the debt advisor and finalized our engagement of the equity advisor. We really are moving forward rapidly at this point, and all of this stuff is happening in conjunction with finalizing the environmental approvals. So from there, we're basically looking forward to the end game, securing our engineering partners, starting to make those calls right now, and getting into the long lead time. Our plan is to have a BFS in the marketplace that is going to be bankable, that people can look at and be comfortable with, because we're going to build this thing, and we need people to be able to see and check off every single tick box that it's going to work, and we need to know that it's going to happen. So I'm working with the best partners from an engineering point of view, from a design point of view. It's absolutely critical. So this is a sort of a landscape. I'll pretty much close off on this slide, because this landscape really outlines, what we're doing. It's all about that processing plant. It's about bringing in hydrogen, bringing in gas. It's about moving the concentrate down from the mine into the plant, and then taking that vanadium out, either selling it to the Port of Fremantle or using it in our own vanadium electrolyte production plant, which we'll be building in the next 6 months in Kwinana. That rolls into local vanadium battery manufacture, which we'll be doing down there in that region as well. Sales of those, using them, and then moving that, growing that market steadily. It's a big market for vanadium consumption. So we have an active plan. We really are starting to get in the groove of delivery now, as we reach the end of our bankable study. We really got to get that out and then finish the job, but it must be done properly in this environment. Not the most straightforward thing, I have to admit, given the complexities of the current world, but we are working very furiously to get it done and making strong progress on a number of fronts. So we'll push that out to the market when it's ready, and then we'll start hitting the next phase of delivery. Okay, I'll leave it there. There's a couple of other slides, mainly around the ESG strategy, which I said is an action-based one, but more than happy to take questions on that. And there are some slides on that in a presentation I gave and put up on ASX a few weeks ago in Geraldton.
Thank you so much for the great presentation. We've had a few questions come through, so I will jump into them. So is there further drilling plan you've got a great resource already as it is, but is there further drilling plan to further expand the resource or even acquire adjoining nearby projects?
Yeah, good question. Always interested in acquiring nearby projects, always interested in acquiring other projects in the region, because we've got a hub strategy here with the processing plant being based in Malawa. We can always pre-qualify existing deposits. There are a number. Your question is well placed. There's nearly 2 billion tons of vanadium resources in the area, but not all of them qualify as suitable for our plant. So absolutely, in terms of our own ground, we could probably add another 20 or 30 million tons of material there, which at a mining rate of 1.6 million tons a year gives us our own life. So maybe in 50 or so years, we might start looking at other people's projects when we need them. But in the meantime, if something really peachy comes up, we might step in and have a look.
And just finally, Vincent, so what can shareholders look forward to over the coming weeks and months?
Right, so drilling is a good opportunity. We will be putting some drilling work in to upgrade some of our resources, to bring them into the reserve. We'll do that after the BFS is done. The BFS itself, obviously, that's getting ready to be done. We're busy crossing the I's, crossing the T's and dotting the I's, I think it is. We are going to be locking in a lot more on the offtake side for the iron, titanium, and the vanadium side. So really starting to push forward to that sort of end game and really starting to add value to the project so it sits in a box and it's ready to go and be built.
Thank you. Well, thank you for joining us today, Vincent. And a copy of today's recording will be available online at brokerbriefing.com in the coming days. But thanks for joining us.
Thank you.